Ladies and gentlemen, it's a great pleasure presenting you the 14th edition of our annual In Gold We Trust report. The title and the leitmotif of the report this year is "The Golden Decade is Dawning." So this year we clearly focus on the long-term aspects for gold and the macro environment. But first of all, I would like to thank my team and our premium partners. As you know, the In Gold We Trust report nowadays is one of the most widely followed publications on gold. And it wouldn't be possible to put out more than 300 pages of research in German, in English, and also in Mandarin without the support of my fantastic team. Roughly 20 people working together, investing 18,000 hours of research, crunching the numbers, preparing charts, layouting, editing, and translating. So many thanks to our fabulous team. And it wouldn't be possible to put out the report for free without the fantastic support from our premium partners, the creme de la creme of the gold business. So thank you very much to our premium partners and my whole team. Now I'm pleased to present you the highlights of the 2020 In Gold We Trust report. Let's do a little review of the 2019 performance. Last year, when we published the 2019 In Gold We Trust report, we said once we go above this resistance zone at 1360 to 1380, massive momentum will kick in and gold will go to the next stage of this bull market. Now, only a couple of days after we published the 2019 report, that actually happened. And from then on, momentum kicked in. It is absolutely clear that we have seen all-time highs in basically every currency last year. In euro terms, in Australian dollar terms, in Canadian dollar terms, and so on. But still, everybody is just focusing on the US dollar price of gold. Now, from our point of view, the world gold price already tells us that we're in a massive bull market, and it is only a question of when and not of if gold will also hit new all-time highs in US dollar terms. And then, ladies and gentlemen, probably a new phase of this bull market will begin, because most people are still focusing solely on the US dollar gold price. Now let's have a look at the performance year to date. We know that when the corona crisis hit, we've seen massive volatility and turmoil in markets. Gold did exactly what it's supposed to do. Gold stabilized your portfolio. Gold hedged portfolio losses, especially on the equity side. So gold was like a solid rock in your portfolio. And as you can see on this chart, gold is up 14% in US dollar terms, and it's up 18% in euro terms since the beginning of the year. So it massively outperformed most equity markets, especially in local currencies. And this is exactly what gold is supposed to do in such crises in financial markets. Ladies and gentlemen, last year we already said that the recession clouds are getting darker and darker. Last year we saw that the yield curve, which is one of the most reliable recession indicators, already inverted. We also saw that many economic numbers actually weakened dramatically. We saw that the US market was already in an earnings recession. So from our point of view, a recession was only a matter of time. Now, of course, the whole COVID crisis was the straw that broke the camel's back. And from our point of view, the measures that were taken by central banks were much more aggressive compared to 2008. They were not only more aggressive, they also implemented those measures much faster than in 2008 and 2009. But one major difference between the JFC and the current crisis is that this time it is not only monetary stimulus, it is also fiscal stimulus that is implemented. So a couple of months ago, topics like MMT, helicopter money, negative interest rates in the US probably wouldn't have been really accepted from the mainstream. But nowadays, from our point of view, it is absolutely certain that those drastic measures at some point will have to be implemented. And of course, this should have very positive effects on the price of gold. And this time, it's not only aggressive monetary policy, it is also extremely aggressive fiscal policy. Just in the first couple of weeks of the whole COVID crisis, 12 trillion in fiscal stimulus were implemented. From our point of view, after the corona crisis, a debt crisis will reappear. We're seeing very stretched balance sheets when it comes to corporations. We're seeing problems arising for households, but also for many industrialized countries. Ladies and gentlemen, from our point of view, the world is running out of safe havens. And I think that gold could be one of the safe havens and profit from this scenario where governments and central banks are basically caught in a zero interest rate trap and have no way to escape this trap, especially when rising inflation becomes a concern. So from our point of view, gold will become more and more of a safe haven investment also for institutional investors. This year, we dedicated a special chapter to the silver market. We've got an in-depth analysis of the supply and demand picture of silver, which is extremely interesting from our point of view. But if you have a look at this very long-term chart, it shows you the gold-silver ratio for basically more than 300 years. You can see that relative to gold, silver has never been cheaper. From our point of view, as soon as inflation picks up and as soon as the bull market in gold really gets going, silver should get more and more interesting. The silver market at the moment is clearly lacking interest, and we can see that due to the deflationary pressure, there's not too much demand in the silver space. But from our point of view, for a contrarian investor, this should be one of the sectors that should be followed very, very closely. We also dedicate a large chapter to the mining shares. From our point of view, the mining stocks are back in the spotlight of the market again. We're seeing that generalists are coming into the market. We're seeing that volumes picked up significantly. Now, why is that happening? First of all, of course, because the price of gold was rising significantly. But we can also see that over the course of the bear market, 4-year bear market, many mining companies really got their house in order. They controlled or they reduced their production costs. They wrote off projects. They got much leaner and restructured their balance sheets. And now it's time to harvest. But additional factors like very weak local currencies compared to the US dollar, and of course a collapse in energy prices produce additional tailwind for the mining space. And therefore we created some sort of a guidebook, small guidelines, quantitative and qualitative criteria that should be observed when you want to invest in mining stocks for the first time. It's a very interesting chapter that we're extremely proud of. And I can also tell you, if you should be interested in the silver space, then you should probably also have a much closer look at silver mining stocks. So that was a short overview of the most important topics of this year's In Gold We Trust report. Additionally, we've got a number of other very interesting chapters in the report. For example, there's a large chapter again about the de-dollarization, and we've got a special interview with our colleague, the analyst Luke Groman. We're analyzing gold in the Bible, so a very historic assessment of gold. We've got a fantastic chapter about demand for gold in Asia. We're writing about the consumption of capital. And then we also got one chapter about the stock-to-flow ratio and how to apply it in cryptocurrencies, especially Bitcoin. And therefore, we conducted a fantastic interview with the legendary analyst Plan B. We also write again about safe storage of gold. So we analyze and take a closer look at 3 jurisdictions. This year, we traveled a bit further to New Zealand, to Australia, and to Dubai. And of course, we also do some technical analysis for the gold price. Where are we in this cycle from a long-term, but also from a short-term point of view? So, ladies and gentlemen, I don't want to spoil you, but we've also got very, very interesting charts on the long-term price performance that we expect for the price of gold. But to learn more about that, you actually have to read the report. Ladies and gentlemen, that was an overview about the highlights of the 2020 IGWT Trust Report. We are very proud about this edition, and I would like to thank you on behalf of the whole team and all our premium partners for your interest in our report. Now we invite you to study our annual Tour de Force and hope that you will enjoy reading it as much as we enjoyed writing it. Many thanks for your interest, ladies and gentlemen, and remember, all roads lead to gold. Thank you very much.